What's up, everybody? It is Sunday, June 19th, 2016, around 7:30 p.m. Happy Father's Day. And it is time for the market analysis for the coming week. And we've got an interesting week coming up here with the biggest referendum in a while, which is Brexit, the British decision on whether to leave the European Union. And so, as it stands right now, it looks like the Stay campaign has started to gain back into the polls. And so, I want to talk a little bit. I want to role play, do a little scenario, different scenarios to kind of think what could possibly happen, so that no matter what outcome happens, you're prepared to trade it based on a plan rather than instinct. So one of the things that we can say is that this, with stay or leave, this kind of referendum, the stay side is basically represents more of the same, and the leave side represents uncharted territory. We've never seen someone leave the European Union of this magnitude, and so this would be uncharted territory. So really, from a market position, you've got to look at it as certainty or status quo versus uncertainty and uncharted waters. So what you would expect to see, or what I would expect to see, is if the Leave campaign gains more traction, you're going to see more uncertainty priced into the market. And uncertainty, another translation for that would be doubt or fear. And you would expect the market to move down and safe haven things like the dollar, the US dollar, and gold to rise as those chances are being priced in. Conversely, if you see the Stay campaign rise, you say more of the status quo, less uncertainty, and you would see gold and the dollar possibly sell off, and stocks and more economic positive commodities like oil rise. So as that should happen as the week progresses here through the 23rd, which is when the referendum occurs. Different prices depending on whether it's skewing more towards the Leave, more to the Stay, obviously from Sunday or whatever. So it looks like over the weekend the Stay campaign gained a bit more traction. If that data continues, there will probably be a gap up in the stock market on Monday. Now, so that's what we should see as we progress through the week and continue to take data points on this referendum. Now, all the other same market things are going to be occurring too, so you got to watch out for that. But this is going to be kind of the forefront news item, I would say, barring whatever other unexpected news event may occur. This is going to be the headlines for this week. Now, as of the referendum, let's talk about that. There's two different ways that it can go, right? We can either the Stay will pass or the Leave will pass, and two things should happen. Let's talk about the easier thing, which is the status quo. If the Stay happens, really nothing has changed, except for the uncertainty about the referendum will dissipate, will evaporate, will be gone, and we will be left without that uncertainty, without that doubt, without that fear of the unknown. And so really the only the reaction that should occur, that is most logical to occur, let's put it that way, is that the referendum, is that if the Stay passes, we should see a bounce in the market as all of the uncertainty comes out from the referendum. This referendum uncertainty, this overhead, comes out of the market and dissipates, goes from 30% or whatever it is now to zero. Now, what's interesting here, so you should see it a relief rally in the financial markets. Here's the little caveat. The last decision we had was the FOMC meeting, and what was interesting there, that happened last, I believe it was Wednesday, the 15th. And what was interesting with that is that we saw a rally, but then it immediately got sold into the close. And to me, that looked like a very bearish sign. And now, who knows whether that was because of other data coming out, etc. But here's what I would say. If we see the referendum pass, and we see a relief rally that gets sold and gets sold into, so we see the financial markets rally and then sell off into the close or over the next few days, that is a bearish signal to me that there's a lot of selling pressure in the market, and that they're taking every rally opportunity to sell into. So they're selling into uncertainty going out of the market because there's some other overriding thing where there's indications that they want to get out, and that there's sellers at the top here waiting for any kind of rally to sell and get a good price selling into this market. So that's what I would say. If we go up from here and we just stay up, then we kind of have to keep looking for clues. If we sell off, to me, that's an indication, a bearish indication, that this market wants to go lower. Now, on the other side, if leave passes, I would expect the market to be flung, at least temporarily, into a little bit of a state of chaos. So what I expect was these more violent moves, like back here, some big gap downs, some quick sell-offs, the bid and the ask really widening, and people selling at bad prices, etc. So I would expect some heightened level of volatility, a lot of uncertainty, people liquidating their positions, at least over a few days, because the outcome of what would happen and what's going to happen in the financial markets and the timetable, all of these things, very uncertain. And so over the next few days after this leave, I would expect gold and the dollar to rise, and I would expect the markets to sell off. Gold rising is probably a little less certain than the dollar rising, because people could be, if they're margined, they could be exiting their gold positions over margin, etc. All these other factors. However, I think it's likely that gold will rise and the U.S. dollar will rise, and the markets will. I think the easiest assumption to make is that markets will fall. And really, it's hard to say where we would go from there because it's uncharted territory. It would be interesting. You'd have to kind of play it by ear and see kind of, well, what does this referendum mean? What are we talking about when we say leave? What's the process going to be like, etc. But so this is just a little prep. These are all things that you should be thinking about, so that when it comes time, when the results are revealed, you're not trading on instinct, which for 99.9% of people is not going to be a good trading decision, but based on some kind of strategy, some kind of plan that you can say, well, if this, then I'm going to do this. If that, I'm going to do that. Or, okay, I don't really want to play this. I'm going to position myself in a neutral fashion and try to, and just sit on my hands through it, whether that's evening out my portfolio, liquidating and just being in cash, etc., etc., etc. Buying straddles, option straddles, so you're long volatility or short volatility or whatever, if you have a specific bet that you want to take. But with all that being said, I hope you prepare and that you have a good strategy, and that you come out of it on the other side with a few extra dollars in your pocket. So with that, follow me on StockTwits Twitter, Trade Kraken. God bless, good luck, great trading.